Hello and welcome to the Stock Planner channel. We're an education channel sharing our ideas. We're doing our own due diligence and winning. Looking for a trade, looking for stocks that are mainly large cap, but well-established companies that are profitable. I like to have undervalued and growing stocks, but that's not always possible. And I like to have stocks that I know a little bit about. My background it is in computer and networking. And I wish I had stayed in Cisco in the 90s. Probably wouldn't be making videos today. And that's what I'm looking at. I'm going to look at Cisco today, but how I found it is I follow those type of companies that are profitable and doing pretty well. Because I know sometimes I like to play the tops and bottoms, and I know that these stocks, good stocks, revert. If they go down, I know a good stock will turn around and come back up, but a bad stock keeps on going oftentimes. And penny stocks have the tendency to do that as well. Profitable companies are reliable and swing well. Anyway, I'm looking for stocks that that appeal to me right at the moment. I'm going down my list and reading the news. And this is a real estate company. It increased their estimates. That's normally a good sign, but I'm a little scared about real estate. And oil is probably a good buy, but the snowflake, it's just I'm looking for green snowflakes. Snowflakes, the greener the better. It shows you the more reliable company. This is Nevada, and I invested that in today. And it was a slight move up, but I didn't think it was going to move much. But here's where, look at that big, beautiful green snowflake. There's no better snowflake than that. Who used to say that? The big beautiful wall, big beautiful snowflake. Let's take a look at Cisco. The health of this company is tremendous. Dividend and the past performance has all been good. Networking. It's a major player in the networking space. In fact, in the 90s, it pioneered the network system. It has strategic alliances with several other big companies, Microsoft, Google, even some wireless carriers. The management has been really great, and it has rewarded its shareholders with dividends. There's a lot of competition with Cisco, though. Currently, because of the tech downside, trading is 31% below its estimated fair value. That's cool. Earnings are growing, but not as fast as in years past. That dividend is terrific. Competitors, and there's many more. Undervalued, I like that. Future growth, that doesn't look so great. It's not a great upward, but it is upward. Past performance seems a little bit flippy-floppy too. Again, trading at 55, it's a relatively cheap stock. It should go to 81, like that. According to Simply Wall Street. Let's see what FinViz has to say about the target price. There's that downslide. A lot of times I like to look at FinViz because it does draw these lines of support and resistance. The target is 62.92, where Simply Wall Street was 81. Much more conservative, and I'm conservative. I think it's going to move up, but not so much. Like I said, the PE is 20, and the forward PE is 15. Those are positive numbers, so that it's a profitable company, and it's got a basic hold or slight buy. I checked out Zacks, and they're saying the target price is 60. Not as high as Simply Wall Street as well. This is Tradingview. This is the zigzag, and it's always perfect. Picks the tops and bottoms perfectly, but it looks to the future. Right now, it doesn't have enough future data, so it doesn't know what it's doing. But I use the indicators. I just use this to kind of see what's happening. And when that crossed over there, that was a sign to go down. And the fact that the MACD was above the zero, those are all three signs that occurred at one time. So with a few days late, we could have caught that trend down based on the indicators. Now we got the crossover here, and a crossover here. And it looks like it's saying it might want to go up, according to my indicators. This is the MACD, the stochastic RSI, and this is the RSI. And my settings are in the comments below, description below. And like I say, the Tradingview is free for 3 indicators. It's very robust. It doesn't have a lot of things turned on. If you want to add more indicators, you pay a little money. It's not much. It's a great package A great place to start if you're a beginner. Well, anyway, I don't think it's going to move around much. Let's see if we can go find something in between 60 and 54. But I don't think it's going down, but let's see what we got. Lately, I've been using calendar spread. Here's another free tool. It's called Option Strat. And we're looking at, I just looked at Starbucks, looking at Cisco. And we're going to look at the calendar spread. I'm going to look at the calendar put spread. And it says for $74, I have a chance to win $131 with a max loss of 74. And as long as it stays between 51 and 59. 51 and 59. If it doesn't move very much, I'll get the full enchilada, and that's be 131. 51 is right in here, and 59 is up in here. So as long as this thing plays in here, I have a chance for a $131 profit, and it's costing me $74 to do it. And this trade ends on 4 March. So what do you think of this trade? Is it going up? MACD says it is. Stochastic RSI says it is. And RSI says it is. The fundamental analysis says it will go up. But Zacks and Finviz says only small amount. A little more for Simply Wall Street. It is an undervalued stock, so I think it will go up eventually. You could buy this stock. It's not too costly. Or you can use options. Buy the stock or use options. Please like and subscribe this video. Start learning how to do this. Engage, make your comments. Set this up if you're a beginner in TradingView and then follow along. My trading has gotten better since I started sharing and doing this analysis, slowing down, making sure I know what my reasoning is and my biases. I guess a bias here is I always loved Cisco and regretted not staying in. Anyway, happy trading. Catch you on the flip. Cisco is a slight buy for me.